So what you have to do is you have to mute your go mute your Zoom. No, you just mute your mic. Your mic's still muted. So let's see.
Okay, bet. Can you hear me now?
Yeah. All right, so you can start sharing your screen.
I'm getting echo on. I'm getting echo. I'm getting a mad echo here.
So what you have to do is mute. So you gotta mute. You gotta turn down your volume.
Turn down my volume.
And so when you turn down your volume, you won't be able to hear as much, but there won't be an echo.
Okay, is it better now?
Yeah. But then the echo is happening because you're also on the Zoom.
So is that okay?
That's okay. I'm gonna mute myself. You can go.
Okay, so you want me to start here?
Yeah, of course.
All right. Is everybody already on the call though?
Oh, there's like 7 people on the call so far.
Whoa, we're just like working out our kinks in front of you. Talk about transparency. What's up? All right, Nav, you're just kind of peeping in on the back behind the scenes there. So welcome to Wednesday Nights with Jay and Manny and Jay. We're about to just serve up some sauce here. I'm getting a mad echo, bro. So I don't know how long I can do this. Maybe I could turn off.
Here's what you do: turn off your Zoom.
Turn off my Zoom.
Yeah, it's your Zoom.
Okay. So I'm gonna leave you guys on Zoom. My bad. Okay, are we good now?
Yeah.
Already. Okay, cool. So, yeah, as I was saying, I appreciate your patience there. Just had some minor technical difficulties, nothing too serious. But we're about to get lost in the sauce, but in the right way, okay? So, everybody right now, all I can say to you is every time these calls happen, oh my God, it's just pips explode all over the place. Literally last call, I think that call was attributed to, I don't know, Manny. How many pips do you think that last call kind of just, how many pips do you think we gave out that last call?
I think it was like almost 1,000, 2,000.
I think you're being conservative. It was more like 4,000 pips. It was actually
4,
more than that.
I just counted. I'm like, yeah, 4,000.
Yeah, no, we were at 30, about 40, yeah, just under $40,000, or just above $40,000 at the time, and we're now almost at 45. So, yeah, you guys definitely want to have a pen out. I'm gonna hop right into the charts. I have a lot of cool things that I'm seeing. We're gonna talk about Bitcoin. I'm gonna share an altcoin that, like, I personally I'm slowly starting to stack on, but we're going to dive right in, okay? So hopefully you guys can see my screen. Oh, wow, Bitcoin's doing a dance. All right, so I want to actually kind of just show you guys what I've been looking at in terms of Bitcoin for the last little while. And bear with me, like Zoom and all these different streaming services, they kind of slow down TradingView for some weird reason. But I want to show you that, you know, we kind of actually reacted right off of a harmonic, which is really, really cool. Like, I was waiting for that 141 to get tapped. And, like, this is the power of harmonics. like sometimes, not all the times, but when you hit that D point, like it literally hit and never came back. What's so crazy is even on a minute chart, the second this guy tapped, it was like lights out, right? So what I'm really looking for when, you have such a fast reaction is not necessarily to hop right in on that first reaction, right? Sometimes, market makers kind of like fake you in by having that strong first impulse that slowly kind of like rolls over, right? So what you're really looking for, one of the things that, when I was new, Manny would always say, look for the higher low, right? And I never really understood what that meant until I started seeing it in the market over and over again. Like, it's so important for you to understand your job is not to be perfect. Wow. Rewind. Your job is not to be perfect as a trader. Your job is to be calculated and manage your risk. So how can I manage my risk? Well, if the market's going to come down and have such a strong reaction off of the D point, what you were really looking for was it to come back and respect that as a low. The sauce is already dropping, folks. I don't know if you caught that. Let me say that one again. Your job is not to be perfect and catch it on the first bounce. Your job is to come back in and make sure that you catch the higher low. So let's just say, like me, you were a little bit skeptical. This did look like accumulation, but on lower time frames, it also looked like it could have actually been redistribution. So there was like a chance that we could have like rolled over, which is personally what I was expecting, was that at least we would fill this imbalance and we'd push higher. Well, the market said we're bullish. We're more bullish than you think we are, Jay. Okay? And this happens. You're not going to always be right, and that's fine. Right? So personally, I caught a sell. I went 200 pips in profit. Then I'd go about 50 pips in the negative. Then I'd go 100 pips in profit. Then 150. Then I'd be break even. And I was like, at this point, I was just like, you know what? Bitcoin doesn't want to sell, but I also wasn't sure if it wanted to buy. Now, this is what's so key. The news is the excuse, right? Well, what was the big news that dropped today, right? Unfortunately, I obviously can't see what's going on in the Zoom chat, but I can kind of feel that some of you would know the answer. The answer is that Mr. Jerome Powell, his meeting notes from the FOMC were being released today. So essentially, everybody's mind is on, hey, what are the interest rates going to be, right? And the biggest concern was, are we going to have, a 1.5 basis point increase, like a 1.5% increase in interest rates? Or are we going to have a 2? Or are we going to have maybe no increase, or maybe a 0.5 basis point? Turns out it's looking more like that 0.5 basis point kicked in. So that was just the excuse to now run the liquidity that was built up here. Now I'm going to show you a trading strategy here that it's not necessarily complicated. It's not, but it really helps me personally when I'm trading. Like, I don't know how to tell you this. At the beginning of the day, I put this $ here and I said they're going to run that money. And so whenever I say they're going to run that money, all I simply mean is they're going after that liquidity. It's really not that complicated, right? We were essentially making equal lows here. Price was bouncing off of this key level here at 43.9. Isn't it interesting that we are potentially building up liquidity again? Hint, hint. Right? Let's show you what I mean. We're kind of still at that exact same key level again. But this is where it gets kind of fun. And this is the thing that you guys should be excited about. Retail patterns don't work most of the time. Market makers know that. But there are some retail patterns that, honestly speaking, when you see them, they generally slap, meaning they work, okay? Excuse my Scarborough lingo, okay? So what I want to do is show you an extremely potential bullish scenario, okay? Right? So what if we are making a inverse head and shoulder pattern right now? What if? And what if when we break the neckline here, and like, I don't plan this stuff. I literally hop on the call and Manny's like, "Are you ready?" And I'm like, "Oh yeah, we have a call." Right? And mentally I'm like preparing in the day, but I can't guarantee what's going to be on the chart. And that's the way we do it. We like literally hop on these charts fresh and look at them with fresh eyes. So you're literally seeing what I'm seeing. So what if we are making an inverse head and shoulders? And for those that might be a little bit new to this pattern, I know I didn't draw it perfectly. I'm usually really precise, but that's not important here. The secret to an inverse head and shoulders is very simple. The height of the head is directly proportional to the move. And now if this hits the number that I already planned, I'm going to actually probably roll off of my chair and laugh. Okay, pretty darn close. So what we're seeing is, for some people, they would call this an inverse head and shoulders. For those who are more of like Wyckoff traders, like myself and Manny, this would be more of what's called a reaccumulation, right? So price had a significant run up, okay? And now I'm going to show you where that ties in. For those who are more technical traders, right? Don't get lost in the sauce, right? Watch this. We had an expansive move up, okay? Okay, 2 peaks, right? Sell off. What did we hit? The 50. Hello. Tap the 50. The 50 ended up being the 141 of yesterday's move. Do you think that was planned? Come on, guys. There's no way in, God's green earth that happened for no reason. So I'm pretty confident as long as we see this break above. So if you guys are setting alerts, okay, again, these are just trade ideas, right? And one of the things that I have to stress, because, we share a lot of great ideas here, but the execution is on you, right? And what I mean is that we don't preach hop on in the second you see a number. What we are actually, the methodology that we follow is break and retest. So what are we looking for a bullish scenario, right? Well, isn't it interesting? It doesn't take a lot of knowledge to see that there's a resistance that's being built up. So let's take our horizontal tool. And one of the things that we learned from one of the educators in our academy, Sean Ogatosin, is that if you see 5 or more touches, you probably have a structure. So this is not necessarily perfect, but we have a structure that's being built here. So it's fair to say, now I'll speak to those who are support and resistance traders. Okay, I got love for all the different styles, baby. We're good with everything. I can trade any different way. We got it like that. If you're a support and resistance trader, you want to wait for the breakout of 44,360 plus 100 pips. And why plus 100 pips? Because we want to see a clean break and close above. Now here's the sauce. I'm on a 5-minute right now because I was looking at some sniper entries earlier in this level, right? You don't have to do the quote unquote risky move. I'm going to give you the safer move. So realistically speaking, we're now on the 15-minute, and I'm going to zoom in for y'all. Okay, hopefully I'm getting the value out to you. If I'm not getting the value out to you, shoot me a DM and tell me how I can help better. But I'm telling you, that's 1, 2, 3, hello, 4, 5. What else do you need from me? Right? That's a pretty darn good structure right there. And I was being super conservative in terms of giving you that gap there. Right? So let's just say we go up even above the wicks. Let's be super careful. What we'd be waiting for is the break and close above that 44,360. So where would I set my alert? I'm going to move my alert, right? I'm going to move my alert right here to 44,460. Okay? So when this guy goes off, I know that my buy is going to be ready. Now, I have to be forward with you. We have a significant amount of resistance above us. So let's actually go through those resistance zones. So for those of you who are more of Fibonacci traders, right, you would understand that that last point of resistance is generally going to be to the upside, is going to be that 786, 886, right? And I want to keep those levels on there for you. We can also deduct that if there was a sell-off here, there are some buyers and sellers that are trapped. Maybe some buy stops that are trapped in heavy drawdown right now, and some sell orders that maybe haven't been, activated. So this is liquidity that's being built up here. So what do I mean when I say liquidity? I mean people have risked their capital and it's literally waiting here. So one of the mottos that I personally follow is trade like a market maker. So a market maker is not seeing, oh my God, we're going to the moon. A market maker is seeing, where is the money at? How do we get the money? So they drive price up into these key levels because they're trying to capture the money. Hence the terminology liquidity capture. Okay, I'm not trying to bore you. I'm just trying to illustrate, because for a lot of people, the word liquidity is not something that they use on a regular basis. Okay? So I'm personally seeing the potential that we might see something kind of like this going, right? So I'll kind of just draw it out for you, right? Maybe going into London, because London might be the juice that we need, right, in terms of like the volume to actually break this resistance. We might see something like this, a retest of the zone coming into New York. New York is where the majority of the volume is. We might see a scenario like this. Now, what's very important is we have a key amount of resistance sitting right here at the 45.5 level. Okay. Now, where did I get that? This is where back testing is really important. Okay. So I was already like trading with somebody earlier today. So I can tell you for a fact, wholeheartedly, there is a major supply zone And when I say supply, I mean like a sell zone. There are a lot of sell orders sitting right here. So here's a scenario that I see playing out. Okay, and it's so ironic because I had this drawn out and I burst out laughing because in the academy that we're a part of, one of our educators actually just shared almost a verbatim breakdown. Okay, which is pretty exciting for me growing in my trading. Anywho, so London kind of breaks this structure here. Okay, shows some strength. Okay, and then we come into the rumblings of New York, i.e. like 6 a.m., 7 a.m., i.e. that's probably a cue you probably want to wake up early tomorrow. Hint, hint. The best trades are generally coming between 4 and 7 a.m. Just saying. Okay? So for everybody on the call, you're welcome. So boom, we come into this zone. Okay, we break above. We now show this key level of resistance as support, and then we push higher. So this is the real area of interest. We're looking for reactions here. We are looking for reactions here. Now, I always say on every call, you don't have to listen to me. You don't. But like I said, there's a running track record of when you take, both Manny and my style and you put it together, it generally results in a lot of pips, right? And I'm not gonna, keep reiterating that, but I'm pretty confident on that. I will literally leave this. I'm actually going to screenshot this picture. That's how serious I am about my belief that something like this will literally happen. Break above on London. Asian session is just going to accumulate all the orders, and we're going to break into this, maybe going into like 3 or 4 a.m., come back down around 5, and New York will take us out. Okay? Now, I'm expecting the potential of a rejection here. Now, here's where it gets interesting. Very important that you hear me out here. If we reject here, we will see a sell down. Okay? And the sell down, excuse all the writing here, I'll go to a cleaner chart just so it's a little bit more straightforward. I got a lot of charts. I got a lot. Luckily, I already have a clean chart. You can tell I do this a lot. Okay, so this is, to be honest with you, this would be the best buy area, okay? And I'm going to tell you why. And this is what I actually really want, okay? Because what would happen is if Asian session comes down here and even just wicks into it, it's still a valid head and shoulders, right? But what will happen is it will just sweep the liquidity here. And we know, right, that the fastest and the most, aggressive moves generally happen after a break of structure. So what I'm personally really, really looking forward to is a nice BOS right here. Okay? So I'll even write that in just for those who might be like taking a picture of the screen or this, that, and the other. Heck, for those who are part of Wealth Empire, shameless plug, I'm going to actually even drop this in our trade room chat. So this would be the ideal buy. And that's just in my opinion. Nice sweep of the liquidity, right? Maybe this will happen closer to, give or take, 10:30 or maybe even like 12 a.m., right? And they love to do stuff like this when everybody's sleeping, by the way. Okay? Everybody on the West Coast, you have a massive advantage. Use it, right? So a lot of these breaks of structure and stuff happen like between 12 and 2 a.m. for us here on the east side, right? So then that makes my risk to reward even better, right? So what would I be looking for potentially here? This trade right here is, ooh, geez, can I even say this out loud? This is a nice, like, almost 6-1 right here, right? Sweeps the liquidity, right? Doesn't necessarily have to even like go below this wick. It just needs to take these guys out because there's a lot of stop losses. Imagine all the stop losses that are sitting right here. Everybody who thinks they're sitting pretty. Now, this doesn't have to happen. I just personally would love if that happened. Okay? Now, this is the 6-1, but here is the wild part. If we do see that resistance take control there, this is where it gets really interesting. We could potentially see a move to the downside to sweep all the liquidity, going all the way down into like the $39,000 level. Now the question is, why would that even happen? It doesn't mean that we're not going up. It's actually, this to me personally is the most bullish scenario, because that would create a balanced market, right? And would actually capture some of the large buy orders that are probably still pending. Okay? Because price moved very quickly to the upside. And whenever price moves very quickly to the upside, it's not necessarily healthy price action, right? So I'm pretty sure, as large as these buy orders must have been, there's maybe a few very large players that feel left out of the party. So it would make sense that price will be attracted to the gaps in the market. Plus, just putting it out there, there's still a CME gap at 41.3. Okay, so that's somewhere around here, I believe. Did we fill it yet? We came really darn close. Right, so there was a gap at 41.3. I believe there's also a gap at 40,600. Don't quote me on that, but either way, coming down here will fill the imbalances here. Okay, at least 50% of this guy will fill this imbalance. Right, will sweep the liquidity that's been built up here from all this sideways action. So where are the dollar signs? Where them dollars at, right? Anybody who knows that song is probably laughing. Who knew you could use that in trading? I literally sing that every day. Where them dollars at? Okay? So, boom. Where are the dollars for those who are more proper? The dollars are here. The dollars are here. The dollars are here. The dollars are here. So this is why I have a kind of neutral stance on Bitcoin right now. I did like this. This was very good, right? We faked to sell, right? And then what happened was, in this falling wedge pattern, we actually broke to the upside. So, and I did like the retest. Like, everything was clean here. Now, the last thing that I always like to do, because I believe in having like a balanced approach, because if anybody's being honest, Bitcoin can do whatever it wants, okay? Right? So I want to show you, if I can catch the right chart here, I do have a breakdown of what would be potentially the bullish scenario, okay? Because if we break above 46 on a 4-hour, in my opinion, forget all of the bearish tones. It's a wrap. We're running. So I want to see if I can pull up that chart. Okay. Bear with me, guys. Bear with me. So I had actually, just so you guys are aware, I drew this chart a while ago. And so every once in a while, it's good to like see what you were thinking. but I did have the idea that we'd make like a 5-wave move to the downside. I do have another chart here. If you can just bear with me, I want to pull it up because it has the complete like bullish breakdown of what Bitcoin can do here. Sorry, I have a lot of charts on here. Okay. All right. Wow, that actually hit. That's crazy. Give me a moment here. I'm going to find it. Okay. I think it's this one here. Okay. If I can't find it, I will carry on with other things. But I would really like to show it to you because it does a pretty good job of breaking down the Elliott wave sequence for Bitcoin. Is this it? No, it's not it. All right. Come on, Coinbase. Maybe it's here. Maybe it's not. Okay, you know what? I'll just draw it for you. Pretty simple. It's not really rocket science. I would love to show it to you though. Maybe it's this guy. Okay, no worries. Okay, so I'll just show you the bullish scenario, and then I'll flip it over to Manny. Okay, so what I'm going to do here is I'm just going to clean this chart completely up. Okay, so just imagine we're looking at this on an Elliott wave sequence here. So for those who don't really trade with Elliott wave, I completely understand. Apparently, it's not that popular, but I personally find it extremely useful. Okay, so in Elliott wave, we generally will see a 3-wave move in one direction and followed by a 5-wave move in another direction. So assuming that this was an A, B, C correction, okay, then we can expect that we would see a potential 5-wave move to the upside. Okay, so I'm going to actually just draw that out. Okay, I'm not really going to have the time to measure it out with the fibs. I've already done it several times, and maybe I can share it in the chat with the group after. But basically what happened is we had like an ABC correction here. Okay, that's fine. But what we can expect following that is a 5-wave move to the upside. Okay, so I believe that we are essentially going through that right now. Okay, so the logic was that we would have the 0 to 1, 1 to 2, 2 to 3, and if this was 3 to 4 and it was shallow, then this is where it kind of like was throwing me off, because technically if you have a fairly shallow retracement on the second or on the first retracement, your second retracement should be deep. Now, if it's not, if this wave is done and this is all the retracement that we're going to get, that kind of lowers the chances of a stronger move to the upside. Okay, so what would generally happen in that is maybe we'd see like a move to like 52 or 53 or 54%, right? But this is why I think the most bullish scenario is for us to actually experience something like a 618, 786, or even like a 712 retracement. So I just want to show you that, just so you have a visualizer for all the bulls, you know, like you have some hope here, right? So what we'll see here is if it was to follow a proper Elliott wave sequence, then we're not done wave 2 to 3 yet. And I think that if that's the case, if I'm just playing it by ear, wave 2 to 3 will actually finish probably tomorrow and Friday. And so wave 2 to 3 will finish maybe slightly higher than this guy here. Maybe we'll like hit 46 exactly, something like that. It would just literally need to be higher than this guy. And then that would force your ABC correction. Okay, so follow me here. So if we had that reaction around, yeah, even 45.67, it just needs to be higher than this. Okay, we could actually see a reaction. Wow, isn't that interesting? It lines up exactly with the model that we looked at before. Wow. So we would come back to that 38. I'm gonna stick with this, guys. Like it's just too clean. Okay. Now here's the sauce, right? I've already done this before, but I'll show you. You would now pull out your Fibonacci extension tool, trend-based fib tool, and you're going to run from the 2 to our hypothetical 3 point and to our 4. And you're going to look for the 1618 to a 272. This is generally the area where you can see reversals. Okay? So I hope you took notes on that, because that right there can help you trading crypto. It can help you trading gold. It can help you trading Euro USD. Heck, today it helped Manny and I trade CAD JPY, right? It doesn't matter. Like if you understand what I just said and you paid attention to what I just said, you can almost see the future. Not perfect, no promises, but I can tell you, just so you're clear, I know we're not really focused too much on that right now, but I was running Elliott Wave on gold for the last 2 days, and I knew that I would have a reaction here, and I knew that I'd have a reaction here, and I have the charts that show that I had this and this marked 2 days ago. So just so you're understanding, the skills that we give on these calls are worth more than free 99. They're actually worth $1 million minimal, or 1 Bitcoin, please. All right. So what would I look for personally? I would look for that sweep of the highs going into tomorrow. That makes so much sense. A sweep of the highs going into tomorrow. Wow, this chart needs to become an NFT. This is an NFT. Sweep the highs, quick sweep of the highs, rejection down, okay? And this is the key thing, and I'm going to end on this. Inside of the waves, there are waves. Do not be fooled when I just say wave 2 to 3. What you need to understand is there are reactions happening within this wave. Sometimes within the wave, there's 3 waves inside of it, hence what I'm showing you. So inside of this, because we're going to have a 3-wave move completed to the upside, I'm expecting an A, B, C. So if you don't catch this, right, sorry, the key thing is for you to catch the lower high. So what I'll do is, for anybody who's interested, I will pause and you can take a picture, because I am pretty darn confident after running this in front of you that something like this is going to happen. Wow. Fibonacci is crazy. So yeah, go ahead and take a picture of that. Yeah, tell your friends, tell your mama and your papa. All right, so Manny, I will throw it over to you, bro. And I appreciate your patience and everybody on the call. I will throw it back to you, sir. Where are you? There you are.
All right, let me turn on the mic. Boom. All right. That was some sauce. I love it. I love it a lot. Let me share my screen. I'm just going to take a look at a big picture. I don't have a lot to share because realistically, when BTC is getting all cranky and moving like this, I just like I honestly speaking, I'm just like whatever. I really don't care about it. Like I'm trading it and I'm doing like little scalp trades because when it gets like this, it's very it's very difficult to deal with. I should have shared. I'm sharing the wrong screen. 1 second, let me share the right screen. I gotta share a tab. Share screen. Brave tab. BTC. There we go. Okay. So let's talk about this and what is going on. Let me just go back to StreamYard. Boom, boom, boom. I can actually take this tab and put it over here. But then I'd be looking at the screen this way. Not good for my neck. All right, I'm going to bring it back here. All right. And boom. All right. So let's take a look at what's going on. High time frame, BTC, Bitcoin. Realistically, there's a lot going on. And it's really, Bitcoin's been doing, I'm not going to say it's doing a whole lot of nothing, but it's certainly doing a whole lot of nothing right now. And it's just consolidating. And when it starts consolidating like that, you got it right in terms of the fact that like it's, you generally, in terms of investment purposes, you're generally just going to stay out of it and wait for it to do something. Now, if you guys see like this line right here, this red line, it's obviously well, not obvious, but there is a, like if you want to use support and resistance or have not, like if it gets above this, then we're running. If it stays below this, then it looks bearish. Let me get rid of this. I don't need that anymore. So realistically, and let me get rid of the Bollinger Bands. Let's testing out a theory of Bollinger Bands. I'm literally always testing out things and seeing like what works, what doesn't. I don't need that. I do still like the supply and demand. And I'll leave the VPS because I like that. All right. So big picture. Okay. So I've been talking about this for a while, the running flat correction, which is a corrective wave based off of Elliott wave. And this is kind of what I've been basing my entire theory on in terms of how I'm seeing the market. Because at the end of the day, there's like for me, I'm a big believer of when I see the market a certain way, I'm going to react a certain way to it. So like literally, this is how I see it. Now there is another part to this running flat correction, and I keep on talking about this, where there's an actual C to D leg and then a D to E leg, where it will make a new high, come up, do one more corrective wave down, but like come up, like do a higher low and then come up. This is the part where you can't really predict on what it's going to do next because like I can't tell you like it's going to do that or it's going to do this. All I could have said was that it's going to come lower than this point right here, but it shouldn't be sweeping here. And that was the basic premise of what I was looking for in the market for the last little bit. So now that we're here, like this is kind of like what I was looking at. And if you guys have been riding with me, you guys know I've been looking at trades down here and looking at like pretty much running it up here. And like even if you missed that, like the falling knife, you at least had that higher low right over here. So let me zoom in on that. Boom. All right. So you can see the higher low right over here. And as soon as you hit that higher low, it can see what happens next. Now, there's a next thing that actually took place as well, and it was Mercury retrograde, right? Mercury retrograde ended on February 3rd. And February 3rd was right here. Now, isn't that interesting that like literally the day after Mercury retrograde, impulse in the market? And like these aren't coincidences. When you start seeing this type of stuff, it really starts showing you like, well, ain't that something? That's very interesting that's doing that, right? So now that we are kind of in this zone, I'm looking for like I was looking for it to hold that position here. So at this point here, on smaller time frames, it's definitely forming an Elliott wave pattern. And I was looking at this as a shallow retracement. I was looking for it to kind of break this. And so like what I'm really going to talk about here is just like supports and resistances and like going over that type of stuff on higher time frames and how you can utilize it on your lower time frames for roadmaps, right? So like realistically, here's a support right here. Here's a support right here. And then your last form of support comes in like right over here, okay? These areas are areas where the market should have some sort of, I would say some sort of issue. Like it should be where like this support should turn into resistance at first, right? Now, if you guys see what happened here, the thing of why this downtrend like became like a uptrend is because the fact that this right here, which was a support, which it should have turned into a resistance as soon as we broke out, became support again. So at this point here, when I'm looking at it as support, that's how I just see it. I don't see it as anything else. Now, could we just like, so like understanding like as support doesn't mean that, oh, you know what, we're not going to break underneath here. No, we could still break underneath here and come back up. Like at the end of the day, always play for the worst case scenario. The worst case scenario is that we come back in, fill the imbalance, come back up. And like realistically, that's very plausible because on a daily, we can see the imbalance in the market. So it's not like it's not there. But a lot of times the market can leave it and the market can come back for it, or it can come back for it later. So we can be like, oh, it's going to come back for it. And it just comes back for it later. It does what it wants. I'm not a market maker. I'm just a guy that trades. All right. So when we're looking at this, you can see what happens here, that this area is resistance. Now, what needs to happen next is that we need to collect orders here. So we're doing a little schematic. And what happens is that we need to blow out of here. So much to Jason's second point here, when if this is like a wave 5, what would happen is that like we would just push up, or like wave 3, an extended wave 3. It would be like a shallow retracement, then continuation, and almost getting into the point where this like right up in here, or even getting to this imbalance is clearly on the daily right here. Like we can play into that imbalance again, right? But oftentimes the next place that I'm looking for the market to really have trouble in is up there, right? Because at the end of the day, that was the last place that we had support, right? So I'm looking for this to be the next resistance, realistically, and breaking this, because I'm looking for us to continue breaking highs, right? As we continue breaking highs, and like I said, it's a high time frame play. So I'm not looking at the low time frame. Jason did a great job at looking at it. This is more in terms of a high time frame expectation that I'm looking for and expecting for Bitcoin as we continue moving forward, right? If I'm going to continue my bullish sentiments about this asset, it needs to continue looking bullish, right? None of this looked bullish until this, and this still doesn't look bullish yet. Like for me, I need to see a break past zones. Like this is bullish. If it fails here, that's not bullish, that's bearish, right? Now, am I going to be like, I'm going to sell it down here? No, because I'm still going to wait, right? But we can see a clear zone, right? From this point here down to this point here, right? And there's a clear fib point here. What do we got? 50% 618. But we got up there, and what happened? we held the 50. So at this point here, I'm not looking for it to retest there. I'm looking for it to now break through this, right? And just utilizing fibs. Not like I'm not gonna get too fancy with it. But what I just said in terms of coming into the imbalance, that's what I'm really looking for it to do, which is get into this imbalance and come back and retest and give me another higher low. Whether it comes like back down to, if this is all one wave, it can come back down to here. It doesn't matter. Like, because you can look at it on lower time frames or higher time frames. If the completion of this is up here, that was one wave, but that can be wave one in higher time frame, where the end result of all that, right, from here to here, is some sort of higher retracement, whether it is up here or 40,000, like testing 40,000 again, right? And then breaking out and testing this level. But what would you expect? So like for me, if it's going to start making bullish behavior, right, I would expect it to do the same thing that just did here, duplicate it again. So break past this, and get really close to all-time high, like here, and then come back down again. Now, the thing about Bitcoin as well is the shallow retracements once the bull run starts running. Once the bull run starts running, we have shallow retracements. So, like, looking for the 50% 618 ends up becoming something where, like, 618 doesn't come. So it's either a 382 or 50%. And so all you got to do, if you're like looking for it, just back test all of this, and you'll see it. You'll see a 50% or 382 as we're pushing up, right? And the reason why that is because that's bullish and it's momentum, right? So you're going to go with the side of momentum. So if the side of momentum is pushing us up, don't argue with it and say, well, it should go down lower, because you're not a market maker. So there's no point of you saying anything different other than the fact of what's happening, right? Trade what you see, not what you feel. So like, this is what I mean. Came down, came up, came down 50%, right? Because we are bullish. Even this is 50%, right? That right there, it's a 50% retracement from the COVID low to this high, right? And like, if we start utilizing like this was 50%, right? And even this came back down here. When you're looking at this from this local level, this is just called taking out local liquidity, like localized liquidity, but it didn't take out the liquidity down here. So at that point, it holds the COVID low, and this just still becomes 50% retracement down, right? Even though it was an 886 on the local level, it still held that 50% retracement from the COVID low to here. So now, at this point, I'm looking for it to make more moves. Now, here's the thing. The biggest factor that I'm paying attention to is the news. March 16th is the next day that the FOMC meetings will be happening. And it's not that Bitcoin reacts towards news. It's just that it's the markets react towards news, right? So we have FOMC and federal funds rates. What does this mean? Okay. So March 16th, you should circle on your calendar. This will be the Super Bowl of literally all markets, because this is when they're going to be announcing interest rates, and they're going to be talking about like what the basis point of the interest rate is going to be going up. So we already know everyone's expecting it to go up because this is March, and last year they said it. We are going to be raising interest rates as of March. So let's not try and make it anything different than what it is. They literally have already told us that they will be raising it in March. But when what happens when you watch the news and you start seeing what happens, they start talking about other factors and other ways of, you know what? Just realized it's not showing on here. Boom. just so you guys can see, FOMC, share. So I'm going to share my entire screen. Boom. There. No, I'm just sharing an entire screen. So yeah, so you can see FOMC happens March 16th. This is your interest rates. This is your basis points, right? And realistically, this is when you start the speculation comes in, right? So for me, with the speculation, it's like, okay, are interest rates going to cause the market to go down or up? I've already done the research, and the initial cause of interest rates going up, it doesn't cause the market to go down. It doesn't work like that. What happens is that the correlation of interest rates to markets is by the time we get to the top. So whatever the top of the interest rates is, that and only that is when the market starts reacting in a negative sense. Negative for people that are investing. So like if you're like holding on to your investments and like I'm going to hold on a bit longer, at the time that we hit whatever the top is, you're no longer going to want to hold on to your investments. So the real question is, here's your rate hike, right? Speculation is that we go from 0.25 up to 0.75, right? So that's going to be 50 basis points. So that would skip what we did here and get us up to here. Is that plausible? Anything is plausible, right? The only thing that I'm looking at is the factor that every single time that they've raised the rates, it's never been as high as the last time. So this is 2006, right? This is 2019. So what do you see? Well, they're forming lower highs, right? This is also a lower low, but they can't make it past zero. So literally, they hit the same low. So the question right now it should be on everyone's mind in terms of rates, interest rates, is are they going to break these levels? Right? Are we going to make a new high on interest rates? Because if we start making a new high, well, that means we're going to start making our way back up. And if we're going to start making our way back up, it's not a pretty sight. Like, this is what to expect. So if you ever think about buying a house, well, guess what? You think inflation is going to kill you? The interest alone is going to kill you, right? And realistically, this is what interest was in the 80s, 18%. Right? Imagine trying to buy a house and you're paying 19% on your mortgage. 84, 11%. I mean, it's a bit better, but you can see what happens. It's gradually going down, right? Well, the combination of this is that it's two things. One is as they continued printing money, it continued going down. Because the real thing is that raising interest rates doesn't really solve the problem. It just continues the problem, because the real problem has nothing to do with interest rates or inflation. The real problem is really our infrastructure and how we do business in North America, right? And that, I'm not going to really talk about that because that's like a bigger existential thing that has nothing to do with markets, but more to do with like how people see markets and what people see. Like when you see a price, for me, the price is absolutely irrelevant whether Bitcoin goes up or down. And I mean, it's exciting, but realistically, it's not, because it's just doing whatever it needs to do. And it's just a form of technology that's going up. And it's cool, but it's all it is. So at this point, when I look at the markets, I'm looking at it from this big perspective of like, well, how does this react? So let's go back into the smaller picture again, and I'm going to wrap it up. So when you're now looking at like BTC with what Jason showed you, right? You have to look at it and now come up with your own analysis, right? You have to come up with your own thought process. How are you seeing Bitcoin, right? Don't just adopt the thought process because someone sounds like they're saying the truth. Like I said, it sounds like I'm saying the truth. I've been pretty right for most of this bull run, but like I lean on my own convictions, and whether I'm right or wrong, if this market decides to just turn around and tank, I will still be okay because these are my convictions about the market. But we can also see in terms of the fractal levels here, how we did shallow retracements, right? Shallow. It wasn't until we came we completed the entirety of the Elliott wave cycle, that we finally did a large retracement down for the full cycle. And if you're seeing where this is coming to, right, from here to here, for me, the completion of this, it can't be lower than this point here. So that's why if we're really looking at the first wave, it would be this. And now the real question is this going to be a 5 wave or a 3 wave? This was 3 waves, but this was playing into the running flat correction. And if you don't know what the running flat correction is, I have a video of several videos on YouTube explaining it. And I have a whole thing on my TradingView explaining it. Like literally, I've explained it so much, I'm not explaining it again. I'm just going to draw it and leave it there. But realistically, this is an Elliott wave pattern that happens like once in a blue moon. And when it does happen, it becomes very obvious that it's happening, right? And it's not until like the bitter end that you realize, oh, like at this point here, you still wouldn't know that this is a running flat correction until the 5 waves down, right? And the last wave that takes out the top, takes out the bottom of the B wave, right? So like this from here, when this happened, that's when you're like, oh, well, if this is going to happen, then what needs to happen next is we need to hold this. And we did. So I would be looking for it to get into 53 because that plays into my bullish scenario, my bullish pattern, right? And it also plays into what's happened here on this side. I would expect it to go higher. And the number one thing that everyone's going to see, so now this is what you have to look at. The number one thing that everyone's going to tell you right now is this. And this is what I mean by you have to have a conviction. What do you see? Left shoulder, head, right shoulder. Bum, 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 bing, bong. It's either going to be the head and shoulders that takes us down to $20,000 or $11,000, and oh my gosh, Armageddon! Ukraine is battling Russia. World War III is going on. Get your money out. Like it's either going to be that, or psych, take your money and run. Because the issue is that you're not going to know. You're really not going to know until it makes this higher or low on this large time frame. So what we have to see is this, right? You have to see it stick higher or low on large time frames. And that needs to happen in order for us to be like, okay, now we're bullish because look what happened next after. And it's going to coincide. And in a bull market, the market's just going to go faster and faster and faster. Like, especially if we're trying to get up to 6 figures, like this is going to go up really fast. And the other thing is, like, if you look at what this is just literally a corrective wave, but what it actually is just accumulation over a year, $30,000 of accumulating. So the question is this $30,000 of accumulating or $30,000 of distribution? Well, for me, when I look at this, here's my one question. Okay. If all the money was bought down, I thought everything came from between this zone and here and this zone here, right? Whose money is this? Not just where's the money, whose money is this? Is this institutional or retail? Well, for me, when I look at this zone right here, this, as like you can just read the average price. Go look at the average price of El Salvador, of Tesla, and of MicroStrategy. And you're going to see a commonality of this green box. So now the real question is, are they going to tank their own investment to get it back down here? Or was this just a good price for them? Because they could have bought all this. They had the money. It's not like Tesla had more money here than it did here, right? So realistically, now this plays into, like I said, my narrative of this whole thing is that we are shooting up to 300,000. It hasn't changed. nothing here has proven to me that it's going to be going down lower. And until it shows me it's going to go down lower, then I'll believe it. So now if we look at this right here, higher time frame, like I said, this is just all high time frame stuff. You're not going to be able to do anything off of this until this higher low, right? If it does this and gives you your higher low, then at that point, what you're looking for is this is that trade that's like this trade that you get into that you can hold for a couple months. That's literally paying you out, and you can just like close it out as you continue going up, right? So this is what I mean. I'm expecting this to be resistance. So it's blowing past this resistance because it's bullish. It's bullish. It's not bearish. So I'm looking for the past support to be resistance, not the past resistance to be resistance. If this was resistance, then for me, I would have been like, ooh, not yet, not ready yet. If this was resistance, when we pushed up past it, not ready yet. Because you can see what happens when it tries to hit above a next resistance. Okay. So now, if we were to utilize a fib off of this point here to just go into like this point here, your 50% retracement would bring us right back here. And for me, I'm like, I'm okay with that because it goes back to my narrative of shallow retracements within a bull run, which makes perfect sense. As soon as we pass this, I'm not looking for this to become a thing that we blow past again. Hey, heck, you know what? Give me this 382. It can do whatever it wants. It doesn't need to do 50%. It doesn't even do 618. It'll do a 382, fake everyone out because you think it might come down here and then it keeps pushing up. I'm giving you the ultra bullish scenario here, okay? So from here, if it starts coming down, so now for me, if it starts coming down and giving me like a very shallow, like large retracement down, at that point, I will be really seriously considering whether or not this is bullish. If it comes back into here, okay, cool. If it starts breaking these levels here, at that point, I'm pulling a lot of money into stable. Like I'd probably pull a lot of money into stable anyways, like up here and buy back in here anyways. But like at that point, I would probably, anything I don't have in stable, I'd probably be pulling out and waiting for it, like for it to regain some sort of like, see how like this came like that. I'd wait for that to happen, higher low, and buy back into higher low. I'm always looking on large time frames anyway. So that's what I'm kind of looking for on the larger scale. And now we can utilize basic thing, which I'll do right now. There it is. Extensions. You know I love extensions. So what happens as we're creeping up these extensions? Look at creeping. Look who's crawling. Slim. So you can see, boom. If this stops here, that's going to be very bearish. So it'd probably come into like the scenario would probably take us above here. The reason why is because this closed above the 50% 618 of all that. So this is going to close above the 50% of 618 of all this, because if this is bullish, if it's bearish, it will close within this box and will not get past here. If it cannot get past here, once again, these are bearish signs. This is bullish sign. Okay, high, low, come up, get past the 886, get into maybe make a new all-time high. Sure, come up to here. Whatever happens, happens. It doesn't matter at that point. But here's your next thing. Here's your last thing, and I'm ending with this. Once it does this, this is a new all-time high. Whatever comes next, if it just does, like, I'm looking for extensions. And at this point, these are my extensions that I'll play out. All the way up to my 4618, which takes me to 200,000. These will be my TPs. This is how I'm going to navigate up if we start going that way, right? Because this will be, that's how I navigated all of this going up, was utilizing this. So if we start heading up and once we break this all-time high, then I'm going to do the exact same thing. And my 618s is what I'm looking for. So I'm looking for 1618. But the difference is if I'm bullish, I'm just going to look for it to smash through all these 618s. So 1618, 2618, 3618, 4618. And I'll do a chart that looks pretty with all this and give a hypothesis of what I'm looking for. And I'll post it on my Trading View. I'll post it on my Twitter. I'll drop it in the Crypto Club chat and also in the Wealth Empire chat. I'll drop it everywhere pretty much. Because at that point, I'm willing to put my name on the line of that this is going to happen. And I really, honestly speaking, I really don't care because I came from nothing. So my name, if everyone's like, "Oh my gosh, you made a wrong analysis," hey, do your own research. That's all. That's my answer. So at the end of the day, this is what I'm looking for. I'm looking for this bullish scenario, but I'm actually looking for this bullish scenario. So here's my timeline too, so you guys can understand it. I'm looking for this bullish scenario to happen somewhere between July and August. And the reason why is because after July and August, I'm actually expecting to get really bearish because it goes back into what I expect with the DXY, which is I'm expecting the second half for the DXY to absolutely tear everything because the interest rates are going to be coming up and people are going to be paying back their loan. So I'm expecting them to push the market up to get a large amount of money to start. Pretty much it's going to cost them nothing to pay back their loan, paying back their loans. Meanwhile, people are still buying it, and now they're short selling it and making money off of the downside as everyone's still bullish after all this because people are going to buy this because they're going to think it's going to 1 million. It just needs to cool off. Like, see what happened here? It's going to be the same thing. It's not going to be the same thing because when we come back down, we're going to come back down and come back close to these levels here. So if you don't take profit up here, that's your own fault. Anyways, that's all. Let me get out of here. That's all I had to say. That was a lot of stuff. In terms of the large time frames, that's what I mainly pay attention to, and that's what I focus on. But I want to make sure I hit some stuff for you guys. All right. If you have any questions, you can find us at these handles on all platforms. Make sure that you follow us on all of them. We're always dropping so much sauce. And have a great day.
Peace out, y'all. Have a good night.